Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, August 16th, 2016, and this is the Daily Report for Gold and Silver. As I said yesterday, same thing today. Although well off of the highs of the day, we do have gold trading higher on the day. Mixed bag in the precious metals markets. We'll talk about that in a second. But first to gold. 1351.30, putting it up approximately $4 on the day. Interestingly enough, the high 1364, so we've seen it $14 higher from this point, and the low 1344 on the day. When we look at spot is currently trading up about $7 at 1346 with a high of 1358 and a low of 1339. Silver, however, has been trading unchanged to down a little bit. Currently, as you can see, in essence, unchanged at $19.80 per ounce. Of course, the big impetus today has been the dollar. Dollar down almost a full percentage point at 94.78. Traders, no doubt a nice upside move in gold today. As I said, trading up about $4 or $5. However, the real picture happens to be a weakening U.S. dollar. In fact, when we take a look at the Kitco Gold Index, and let me kind of bring that into a limelight right now, as you can see, we've got the total change right now, this of course being spot, but up about $7 on the day, and $11 in gain is due to a weakening U.S. dollar. Normal trading is actually selling the market off about $4.60, and that is where we're getting our net gain of plus $7. Nonetheless, it is a strong showing for the market. Now, we're looking at COMEX futures, and we talked about the other day, the fact that really the most prevalent overall characteristic right now in the market is the fact that we've seen the series of lower highs and higher lows. That, of course, is a compression triangle. I can tell you that as this market was trading overseas last night, this candle right here, the current candle, let me try to kind of draw it in, but this current candle, of course, when we're up near the highs, which would have looked something like that, was a really impressive move, because we saw the market genuinely breaking out above the upper level resistance line, this resistance line right in here. However, market couldn't sustain those gains, and as you can see, we've got, in essence, it would be called a shooting star. That's the type of candlestick that we're looking at, or an inverted hammer. An inverted hammer, if the market's moving down and then you get this candlestick type, that would be an inverted hammer. If the market's been moving up and then you get this candlestick type, it is called a shooting star. The characteristics of this particular candle type is that it makes an extreme high, and that high cannot be held. So I don't know what we're going to make of it, except for the fact that what we have seen is a series of highs that have come and challenged this upper level resistance, but nothing on a closing basis has taken that out. Now, we're also getting closer to the apex of this particular triangle, and as I said, I believe that we will see a sizable breakout, and I also believe that that breakout will be to the upside. Now, we're in essence back to where we put our initial position on. Basis COMEX roughly at 1354. Market is roughly at 1352. Now, in terms of my actual target right now, I've updated my target a little bit in that I have accounted for the fact that we've had these failures recently. So rather than expecting that one-to-one relationship between wave 1, of course, and wave 5, that would take us to about 1430. That's here. I'm also seriously looking at a possibility that we will see what's called a truncated fifth, and it will only come up to maybe a 61% extension of wave 1. In other words, wave 1 moves $1, wave 5 would move 61 cents. So my updated target really puts us in between, call it 1380 and about 1430, and it's based upon a Fib study of a 61% extension versus a one-to-one relationship between wave 1 and what I believe is our current wave 5. Now, traders, obviously, my recommendation is to maintain your current long position, maintain your current stops. We are looking at a longer term, a weekly chart in Japanese average format, and it is quite clear we've got these series of tops that came in, this being what, the end of 2013, beginning of 2014. Carry those across, kind of line that up straight. But we can absolutely see on a technical basis where this resistance or these headwinds are coming from. The nice thing about this, though, is as we look at this chart in this way, at some point, I believe we will break through this current level of resistance. And I should say if, but I'll say when we do, the next real level comes in at this top right here. And take a look at that number, roughly at 1440, roughly in that area. And then when I bring back up this daily chart with our target of 1430, I think you can clearly see where this number comes from, because on a technical basis, if and when the market breaks above this particular price point here, the next real level has got to be 1430. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.